Welcome back. The top drag on the Nifty today is the IT space. And ahead of numbers, we've also had a brokerage downgrade coming in on HCLTech. Let's focus on the sector ahead of the third quarter earnings as it rings in the earnings season once again. Motilal Oswal expects the demand environment to stay steady at best, marginally incremental. They say that mid-caps are expected to outperform once again, not very different from what we've seen in the market. The stock moves itself with a range of about 2.5 to 3.5% in growth. Abhishek Patak, who's the research analyst at Motilal Oswal Financial Services, joins in with his view. Abhishek, while a lot of people are saying that IT's underperformance makes it an interesting pick right now, it's at that confluence of value yet underperformance and perhaps some bit of optimism after weakness that we saw last year. Do you believe anything in these numbers will cause that shift and accelerate it, or you believe that it will stay consistent and consolidatory in 2026 as well?
Yeah, hi. Thanks for having me. So I think we're actually in the camp that IT has actually bottomed out. Okay. Whether it's a short-term call or not, that's probably a debate. We do believe 3Q will be a bit of a non-event, considering it's a seasonally weak quarter for the sector, and we've generally had furloughs and impact of that weighing in on numbers. But that said, we do think that in 26, as AI services sort of revenues pick up, as attention shifts from AI capex to AI services, we do expect some of that benefit to trickle down to IT services as well. So yeah, that's the camp we are in.
Okay, so you said mostly IT has bottomed out. You're not sure whether it's a short-term call or a long-term call. But if it does happen, say after quarter three, which is supposed to be a weak quarter, we do see recovery. Will it largely be led by large caps, or do you think mid caps will still continue to outperform? And what are some triggers that the market is watching out for post quarter three, which would lead to that recovery?
Yeah, I think let me just clarify. What I meant was I'm not sure if the upgrade call works in the short term, but over a 2 to 3 year period, we are quite positive. So that's one. The second question around mid caps versus large caps. I mean, historically, in the last 5 years, mid caps have definitely had the upper hand. But considering the valuations at which the large caps trade right now, we do believe that there are pockets of opportunity to pick from in case demand turns around. And hence we largely sort of like mid caps, but we do believe that large caps selectively offer great value at these prices as well. On the question of around what happens post 3Q and sort of what to look for in terms of demand trends. So we think a leading indicator of IT recovery will be short cycle deals sort of coming back, and these short cycle deals will largely be AI implementation deals where the enterprises will move from pilots to serious implementation, and we think that will start happening maybe from mid CY26. So we are looking at sort of partnership agreements signed between, let's say, Anthropic, OpenAI, and the likes, and Indian IT services. So we're beginning to see that happen. We are seeing Anthropic sign agreements with Accenture, with Cognizant. If we see more of that in IT, we'll probably have a good indication of where things are headed.
Right. A lot on the street do believe that mid-cap IT is likely to do well. Apart from results, I wanted your thoughts on what you made of the Coforge deal, $2.5 billion acquisition that they've done from a PE firm. Some argue the valuations, but some also say that Coforge has been, known to turn some of these acquisitions around.
Yeah, no, I think this is the acquisition which has been done for its capability. So I think we're actually quite happy about what capabilities and what what verticals this allows Coforge to participate in. On the valuations front, it is slightly expensive as compared to what Coforge is generally bought. But if it is an AI native / digital engineering company, it's not a surprise that it's slightly expensive. So the asset is good. I guess the only concern from our end is the potential dilution that may happen, going forward in the next 1 year once the deal is integrated. So we like the asset. The dilution is the key concern for us.
Okay. That's about Coforge. When we are talking about some recovery or the triggers going forward across the board, be it large caps or mid caps, what's your sector view? Is there any specific segment which would do really well, something that would continue to disappoint?
Yeah, so I mean, logically speaking, companies which are application development heavy could face some troubles initially as clients move to productivity gains from application coding, right? So from that perspective, companies with higher infrastructure management services, or let's say higher data practices, etc., they might do better than the ones who are mainly application development heavy. But most large caps are fairly diversified, and I think it's a top-down call rather than a bottom-up call right now. I think the industry has been, in the middle of a massive downturn for the past 3 years. And if things turn around, if clients actually move to spending on AI and on discretionary spends, I think the benefits should be well spread out.
Okay, and Abhishek, what would your top picks be in the IT space?
Right. So right now, we upgraded Infosys after almost a 7-8 month we are on the sidelines. So we like Infosys a lot right now. HCL remains our top pick because the portfolio is very well balanced. It's kind of an all-weather stock for us. And on the mid-cap side, we like Coforge a lot. We like the sales engine, we like the growth momentum, we like the valuations as well. So I think Coforge is probably a top pick there, followed by Infosys, which I think has a lot of good deal wins in the bank right now. So the next 2-3 quarters for Infosys, in my opinion, look very good. And the third pick in the mid-tier space would be Hexaware, which I think is probably primed for a turnaround if a couple of deals get signed and things improve from here on.
All right, and you don't think that HCL valuations are any concern? Because this morning itself there was a note that came in from an MNC broker. They've downgraded HCL and they believe that the valuation premium over TCS and Infosys at 5% is something that caused them to go ahead and downgrade the stock.
Yeah, I think it's an interesting debate. We've generally had so over the years we've generally had a bellwether, and we've had a lot of other companies follow, and we've notched down their valuations to bellwethers right in each business cycle. We are probably in a bit of a unique business cycle where we've got we don't really have a very clear and strong bellwether, which means that any company that manages to outperform their peers has a right to be valued at a premium, right? So I think margins for HCL are a concern, but if they maintain their growth momentum, if the next couple of years they can sort of maintain what they've been doing on top line, I think the valuation premiums can be justified. So in my opinion, the cycles are slightly different this time, and the right to win is not as obvious as it was maybe 10 years ago.
Interesting one, Abhishek. Thank you so much for joining in and giving us that perspective, because we believe that the multiples aren't sacrosanct anymore. They're basically growth-led, and the ones that outperform will perhaps get better multiples, and the ones they don't will get derated. Wish you good luck. We'll speak to you post the results season, during the results season as well, once those numbers do come by. We take a